Hello, trading is closed on July 7th, 2016. Yesterday we said that dropping and rallying all day was basically a bullish pattern. We said there were two things which could kill it. One would be gapping down sharply at the open, which I said would have ominous consequences. That didn't happen. And the other was an A-shaped day, such as we got. We did get the positive thing in the beginning to satisfy the prediction, but this A shape is not good, and we'll go over that in just a minute. MEJT said that rally was a false one. It says this drop was a false one. We've retraced to the line, and there's no new signal for tomorrow, or target for tomorrow, I should say. Well, this is a pattern which almost always closes at the day's high. When that doesn't happen, it usually leads to more trouble. That pattern would be ruined if we gapped up and took out this high promptly. We'll see why that's unlikely in just a minute. Gapping up, hitting a new recovery high and closing in the red is never good. It particularly isn't too good when you close not only in the red but under some of these retracement levels. Unless we gap up sharply tomorrow and take out this high promptly, I'm looking for lower prices. We're going to have to adjust our target somewhat. This is the projected minimum length of the drop, but you have to measure from that green line. So every now and then we'll just move this one up. Still is just under 1970, and that's a pretty good drop if the signal works. It would be killed if we move significantly over that green line, which is more important for the signal than whether or not we hit a new high. Well, here's a daily chart. Here's the initial drop. Here's a 2B bottom, meaning we just undercut it and it was a false low. Let's measure 169 days to today's high. You'll see this is the first significant retracement. You connect those lines. And one of my trading rules is if you break a significant trend line with a straight move down, you almost always retrace to the line. So we've retraced to the line. That's as high as we have to go. And unless we gap over this tomorrow, we've rallied to resistance but not through it, and the drop should begin. Of course, if we gap over it, we've overcome resistance, and the call fails. But let's not forget we have some DeMark sell signals too. We have a negative pattern here. So absent a big gap up at tomorrow's open, taking out this high, I look for lower prices, and I think much lower prices should be coming. We still have these targets in the middle 2000s, and once we start dropping, I think we should go lower than that. We have this target now in the 1970 minus range, and that's where we're headed once we drop, and that's today's call.